Good afternoon. Thank you for joining us. My name is Adam Thorne. I'm the Director of Operations for UST. And we hope today to give you a little bit more information about unemployment insurance options for nonprofits and how UST works with nonprofits around the country to help manage those options. When we conducted a survey last year, we found that 1 in 4 nonprofits are not aware of the alternative options for funding unemployment benefits that are available to them as a 501c3. Understanding these options is important because unemployment taxes and the state unemployment tax system can often result in excess costs. Most employers nationwide pay as much as $2 in unemployment taxes for every $1 in benefits received by their employees. And that money is really going to fund the cost of the unemployment tax system as a whole. Claims for your former employees certainly make up part of that cost, but you're also subsidizing the experience of other employers in your state, including employers who have ceased operations. And of course, the state requires funds to manage the administration of the state unemployment program. And all of these excess costs are obligations that nonprofit employers can actually avoid. And in fact, that decision is becoming even more important as many states around the country have faced mounting obligations related to federal loans that they've been dependent on over the last few years simply to keep the unemployment fund solvent. The interest on those loans and the principal on those loans is driving up unemployment taxes in many cases for employers who haven't seen unemployment volatility at their own organization. And again, this option is really a unique choice that's available only to nonprofits. As a nonprofit employer, you actually can choose to provide unemployment benefits to your employees not by paying unemployment taxes, but rather by reimbursing the state dollar for dollar for the benefits that your employees receive. This is a benefit that's allowed to you by federal law, and we won't read this to you, but it is a stipulation that's captured in the Unemployment Act under the same designation that provides 501c3 benefits also related to unemployment taxes, specifies that a nonprofit employer can choose to provide unemployment benefits either by remitting unemployment taxes or reimbursing dollar for dollar. And again, by reimbursing dollar for dollar and avoiding those excess costs that the state unemployment system places on employers, it's an effective way for many nonprofit employers to reduce their bottom line expenses. So to put this into context, unemployment is not something that's been with us forever, although it's certainly been with us for quite some time, founded originally during the recession under FDR as a means of providing support for the very high number of unemployed that were present at that time. And we can see here that that still exists as the peak in unemployment for the country as a whole, with unemployment rates in the mid-30s exceeding 20%. Up until 1972, most nonprofit employers were actually exempt from providing unemployment benefits. And the recognition in the early 70s was that that nonprofit community had grown large enough that protecting those employees was important. But in requiring those nonprofit employers to provide unemployment benefits for the first time, some very effective lobbying done on behalf of nonprofits resulted in nonprofit employers, 501c3 specifically, being given 2 options providing those unemployment benefits, either paying unemployment taxes or reimbursing dollar for dollar. In the early 80s, recognizing that this option was still little known to many nonprofits, and wanting to ensure that those organizations were aware of the options available to them and could utilize that option effectively, a group of nonprofits in Southern California, led by the United Way, founded what was then known as the Human Services Unemployment Trust, which would later be known as UST. So we've been working to provide nonprofits with support and understanding their unemployment options, and utilizing the option that's most effective for their organization for over 30 years now. And obviously in the recent past, some key events in the economy as a whole, and unemployment specifically, have made these questions much more important for nonprofit employers, where today the most important thing that we recommend for nonprofits is simply taking the time to evaluate your options and making sure that you're using the choice that's most effective for your organization. So why is this important? Oftentimes what we see with unemployment is that it's not really clear to the organization what the cost of some of their unemployment decisions are. What we hear frequently are stories such as the one that you can see on the screen now. Perhaps you have an employee who at some point has worked for you, always got along really well with everybody on the team, great guy, but simply isn't meeting expectations in terms of your organization's policies. And of course, from a consistency standpoint, it's important that you enforce those policies for everybody. And so this employee has to be let go. But you don't choose to protest the benefits that that employee applies for, despite the fact that they're likely eligible for protest, simply because you think he's a good guy. And in the past, those types of decisions didn't really carry a lot of consequence. Whether or not you chose to respond to a request for information for a claim from the state was really immaterial. It didn't have any significant negative impact on you. Obviously, you were going to see some costs associated with that claim, but there really weren't any other major repercussions. The truth of the matter is that federal legislation that was recently passed is really forcing that to change. An act going into effect later this year called the UI Integrity Act essentially obligates all employers to respond to claims in full the first time that that information is requested. This is really being done, again, through the legislation of the federal government to help reduce the cost of unemployment benefits paid in error. While it's easy to assume that unemployment benefits paid in error refers to mistakes made at the state level, the federal government has determined that the root of many benefits paid in error are actually a lack of information from the employer at the time when the claim is initially filed. What they find is that the claim is initially awarded based on an incomplete explanation of the circumstances for termination, and at a later date the employer provides additional information which overturns that claim, but now all the benefits that have been paid in the meantime are considered to have been paid in error. Reducing those benefits paid in error is a major source of cost control in terms of the unemployment system as a whole. So to help meet that objective, this law requires employers to respond to every claim every time and to provide a complete response the first time information is requested. So this is just one example where current legislation really obligates employers to be paying very close attention to their unemployment obligations and be sure that they're in compliance with this new legislation, amongst other reasons that are related to the costs incurred by your organization. So what are the ways to help keep your unemployment costs low and under this new legislation to ensure that you're compliant with those expectations and avoid any penalties? The biggest thing is really recognizing that an unemployment claim is not an event that's only relevant at the time when the claim is filed. It's really very important to essentially have policies and procedures in place that allow you to be prepared for an unemployment claim for any employee. And so really ensuring that your hiring practices and your documentation around employee expectations are well documented and made clearly available and informed to employees, that they acknowledge receipt of those policies, and that in managing that employee, any deviation from those policies is carefully documented and that those records are well maintained. Second, and again we touched on this a moment ago, is it's really critical that a claim be responded to every single time. So anytime information is requested from the state, responding to that claim promptly and within the timeline provided by the state has always been important from a cost management standpoint, now becomes even more important in terms of compliance with the UI Integrity Act. For cost control specifically, we really advise employers to be very careful about when they decide whether or not to protest a claim. Oftentimes it can be tempting to view a claim or responding to a claim or protesting effectively as a bit of inconvenience, perhaps not worth your time. But the fact of the matter is that those costs truly add up, and just having the practice of making those decisions around which claims are protested as objectively as possible and being consistent in protesting benefits when an employee was terminated for cause or when they terminated voluntarily without a sufficient justification, so that those costs are being well managed and you're not paying costs for unemployment that aren't warranted. And certainly a critical component of protesting your claims effectively is being sure to stay aware of the timelines around any active claims that you have and attend the hearings if you're in a position where you've appealed a decision on a claim. Obviously, a failure to appear at a hearing is essentially an immediate loss of your protest of that claim, something about which not much can be done. So attending the hearings and being consistent in that regard is really very important as well. So as we've said a couple of times, the real priority for a 501c3 is simply being aware of the options that are available to you and evaluating carefully which option is going to be most effective for your organization. The default option, and again, if you either were not aware about reimbursing at the time when you established your organization or didn't specifically convey a decision to the state, is that all employers would be set up to pay unemployment taxes. And that tax rate is something that most of us are familiar with. It's expressed as a percentage of reported wages and essentially acts a lot like private insurance, or rather, excuse me, state public-run insurance. You pay your taxes, which function like premiums, and the expectation is that most employers will pay more in unemployment taxes than their employees receive in benefits. That's how the unemployment tax insurance pool essentially remains solvent. The other option available to 501c3s is dollar-for-dollar reimbursement. It's important for us to make clear that as a 501c3 employer, you have the option to utilize the direct reimbursing alternative for nonprofits on your own. It's not mandated that you utilize some alternative service provider. You can choose to simply pay the state directly. We believe that that option presents some challenges, although it does allow you to stop paying excess costs that are built into the state unemployment tax rate and really cover only your organization's costs. And the final option is simply that dollar-for-dollar reimbursing option, but with the additional tools and resources that help make that option as effective as possible for your organization. Essentially, taking the challenges that are posed by reimbursing and giving you the tools to manage those challenges effectively. So looking at these each in a little bit more detail, we certainly want to make clear that each option has its own benefits and challenges. Paying in the state tax rate system, obviously state is always going to pay all of your claims. If your unemployment taxes in a single year fall short of what your employees' benefits received were, you're not going to be on the hook for that excess. The state's not going to come back to you and ask you to pay the difference at the end of the year, for example. But again, like insurance, you would expect that your rate would be adjusted so that ultimately, over the long term, you do in fact make up that difference and then some, with most employers, again, paying about $2 for every $1 in benefits that their employee receives. The state system is also appropriate for an organization that really has very high levels of unemployment activity and turnover relative to other employers in their sector or state. Every state has a maximum unemployment tax rate where essentially your obligations are capped. And if you find that you're at that state maximum unemployment tax rate and there's little that can be done to change the volume of claims that you have, then the unemployment tax system is typically going to be the most cost-effective solution for your organization. You would essentially be one of those employers who are being subsidized by the state unemployment insurance pool rather than having to provide that subsidy to other employers. And again, subsidizing other employers is one of those major challenges. You also are helping to cover the cost of benefits paid in error and benefits paid to employees of organizations that are no longer in operation. And you don't receive any kind of refund or return to your organization in instances where your unemployment taxes actually exceed your employees' benefits. And again, that's actually typical. That's the expectation that we would have for most employers, is that their taxes do exceed their employees' benefits. All that being said, the unemployment tax rate system is really best for smaller organizations. We typically say that if your organization has fewer than 10 or 15 full-time equivalent employees, oftentimes the unemployment tax system is going to be the best solution. If you, again, have a very high rate of turnover or unusually high claims activity compared to your sector or state, you may find that the unemployment tax system is actually subsidizing your employees' unemployment activity. And related to that is if you have a model that requires you to routinely bring on a significant number of staff members and let them go after a short period of time, that's often going to result in unemployment activity that's really in excess of what you might be paying in unemployment taxes. Looking at reimbursing dollar for dollar, the most obvious benefit is clear. You're not paying any of those excess costs that the state unemployment tax system presents. You're only paying dollar for dollar to the extent that you can manage your employees' unemployment activity effectively. You're not paying the cost to keep the system as a whole solvent or to subsidize other employers in your state. The challenges are fairly self-evident. Because you're paying dollar for your unemployment activity, it's much more difficult to anticipate what that activity might be. And you're really at the mercy, from a cash flow and budgeting standpoint, of the actual claims activity that you see. You may see those benefit charges shift fairly significantly from one period to the next, most states billing quarterly, but some states billing monthly. And because you can't really anticipate those charges in very close detail, that can be a real burden from a cash flow standpoint, as the state doesn't really provide any kind of leniency in terms of the timing of those payments. Those payments are typically due within 30 days after the end of the period. Related to that is the fact that if you do find yourself in a position where you do some restructuring or workforce reductions, you can see those dollar for dollar costs temporarily exceed what otherwise would have been your cap on liability in the state tax system. That's somewhat to be expected, and really the relevant question there is how often does that occur? Most reimbursing employers will find that those periods of volatility are infrequent enough that although in that one period, quarter or year, their dollar for dollar costs were in excess of what they would have otherwise expected to pay in unemployment taxes, over the long term, the savings during the more stable periods more than offset those temporary periods of volatility. And again, because you're paying dollar for dollar, it really becomes essential to stay on top of your claims activity. Any claim that's allowed to slip through the cracks where you had an opportunity to protest the claim but either failed to respond in a timely manner or had an insufficient case to put in front of the state to try to protest that claim, is an instance where those dollars are coming right off of your bottom line, and you're seeing money go out the door that you would otherwise hope to keep to dedicate to your organization's mission. Reimbursing dollar for dollar, again, is better for larger employers. Certainly once you get to 10 or 15 full-time equivalent employees, it starts to make a bit more sense. What you're really looking for is a situation where you can see a fairly consistent pattern in your historic unemployment activity, and you can see year after year that your unemployment taxes are in excess of what your employees are actually collecting in benefits. So again, if you're overpaying on state unemployment taxes, that's the clearest signal by far that the reimbursing option is something you should consider carefully. And just the opposite of the point that we made on the prior slide, you're really going to be best served by reimbursing if your workforce is relatively stable. That's not to say that there's no level of turnover that can be readily accommodated. The main point where reimbursing starts to make the most sense is when you have some degree of consistency. As long as you can see, again, year over year that your unemployment activity is relatively consistent and the dollar for dollar benefits are less than what you're paying in unemployment taxes, that's really the most significant point to investigate to determine if reimbursing is going to be a good fit for your organization. So with those challenges in mind, how did UST develop the tools to really provide employers with the assistance that they need to make reimbursing as effective as possible. In a nutshell, that's truly UST's mission, is to first and foremost help an organization decide which unemployment funding option is going to be most effective for them. And when we find that reimbursing is going to provide a savings opportunity for the employer, giving them the tools they need to make that reimbursing option as effective as possible. So the first thing we look to address is that cash flow and budgeting concern. How do you take your real-life claims activity, which is going to vary somewhat, and help reconcile that with your need to be able to project effectively your cash flow and budgeting needs into the near future? And UST essentially works by helping to even out the volatility that you see in your claims activity. And we do this by having members place funds into trust with UST. UST is a grantor trust owned by its members, and those funds act as a reserve, a savings account almost, that helps to offset the volatility that you would otherwise see in claims activity. Essentially, during periods where your actual claims activity are less than what we're asking you to set aside, you're building that reserve balance, and that reserve balance is what allows you to weather the less favorable periods of time when your claims activity actually exceed your deposits into UST. And over time, that's exactly the objective, is that what we ask you to put aside with UST, the darker line here, is much more stable than what you might be seeing on the claims side, with those peaks and valleys being evened out through the reserve that we ask you to build with UST. The other major challenge faced by reimbursing employers is staying on top of your claims activity and making sure that you're responding to claims effectively. So to help address that, UST works with the largest claims administrator in the country to really give you all of the tools that you need to manage your claims effectively. So that's done by ensuring that any correspondence related to unemployment from the state comes directly to our claims administration team, and then they can work with you to determine what the circumstances were around that employee's separation, advise you on whether or not a protest of that claim is appropriate or likely to be successful, and then actually provide you the support throughout the claims and hearing process to give you every possible opportunity to have a successful protest of that claim. We've found that on average, an employer that utilizes a professional claims administrator sees their dollar-for-dollar unemployment benefit costs reduced by 15% over time. And this just helps to show exactly how that happens. Again, all of those best practices that we identified earlier are exactly the things that the claims administration team help you to ensure are in place. Making sure that from a policy and procedure standpoint, you know the best practices that protect you before a claim is even filed, responding to claims on your behalf and supporting you throughout the appeals and hearing process, and even providing a professional claims representative at any hearing to make sure that your case is presented as effectively as possible. In addition to that, our claims administrator provides essentially state-of-the-art tools designed to help you manage your unemployment costs. This shows you a screenshot of our online case builder system, which allows you to see any active claims that you have, what information has been requested from the state, actual scanned images of the documentation received from the state, and any documentation that you've provided in response, any actions that are required on your part responding to the state or providing additional information are all captured in this one central dashboard. And this allows you to not only keep close tabs on your claims activity, but in fact gives you the ability to delegate some of these tasks where appropriate. So if you want an employee's direct supervisor to provide a certain piece of information or the details around that employee's separation, you can actually assign those tasks directly through this online portal. And finally, from a cash flow standpoint, UST really works with organizations to preserve your assets. When you participate with UST, all of the funds that we ask you to deposit initially go into a reserve balance that you own. And it's from that reserve that we pay claims charges on your behalf, and where we allocate your proportional share of operating costs as well as return on investment for the trust as a whole. So by making sure that those funds remain an asset of your organization, and by managing those funds through a conservative investment portfolio designed to preserve your assets and provide moderate but healthy rate of return, we really are giving you the tools to make sure that your funds are well protected and that you're also well protected against volatility in your unemployment activity. And this again just helps to illustrate how having those funds set aside, working with the claims administration team to avoid any costs that are not warranted, and then also utilizing that claims administration team to carefully audit the state's records and determine if any excess funds have been spent on your organization's behalf that can be recovered from the state. All of those are designed to keep more of your organization's assets available to support your mission. And despite all those steps that we take to preserve your assets and provide you with the tools needed to minimize your unemployment costs, we recognize that there's still unforeseen circumstances that can sometimes occur. So the reserve balance certainly provides the first level of protection. We also self-fund a program through UST designed to provide protection against excessive loss. So stop-loss protection is also provided really to ensure that those once in an organization's lifetime type of workforce reduction events that might otherwise seriously threaten the solvency of your reserve or place unmeetable burdens on your organization, that stop-loss protection is there to help minimize that catastrophic risk. So this just gives you a little bit of an idea of our team and the people that we work with, including our board of trustees, all of whom are volunteers coming from the nonprofit community themselves, either executive directors or CFOs of UST participants. We're very proud of the fact that we have the lowest administrative costs of any program like ours in the country, and we're also the largest unemployment trust in the nation. Again, we were founded in 1983 by nonprofits and are not operated for profit even today. We work with over 80 associations, groups like the Connecticut Association of Nonprofits or Leading Age, different nonprofit advocacy and affiliation groups that endorse UST and help us tell their members about these cost-saving opportunities. And probably our biggest point of pride is the fact that 93% of our members have said that they would recommend UST to another nonprofit, which we really think speaks to the effectiveness of the program and the cost savings opportunities that it provides. And again, this just gives you an idea of the types of associations and nonprofit affiliations that we work with nationwide. So in closing, if there's one thing that we would hope that you take away from this presentation today, and hopefully you have a bit more information about the unemployment options that are available to nonprofits and some of the cost-saving opportunities that are available to you, the biggest recommendation that we can make is just simply taking the time to complete the short evaluation of what your unemployment costs look like currently. Taking the time to benchmark your unemployment costs will either confirm for you that you're utilizing the approach that's most cost-effective for your association, or actually provide you with a savings opportunity to help reduce your expenses. So again, looking at the size of your organization is essential. Much fewer than 15 or so full-time equivalent employees, and typically there's not much of a savings opportunity with reimbursing. But any larger than that, it's worth completing the evaluation. Having some familiarity with your unemployment activity, and in a large degree you can get a sense of that as well from your position on your state's tax rate scale. If you find that you're at the top of that scale, it's very likely that your dollar-for-dollar benefits being paid to your employees may in fact exceed your unemployment taxes. But if you're in the middle of the scale, or certainly if you're closer to the lower end of the scale, you may find that your unemployment taxes are well in excess of what your employees are actually collecting. Timing is important, so if you are anticipating any major changes in staffing, either growth or reduction, you want to consider those carefully in terms of when you move from the state unemployment tax rated system to the reimbursing option. And again, if it looks as though there's a cost savings opportunity, just really evaluate how your organization might benefit from having the dedicated support around claims administration that would really minimize the burden on your human resources team. This gives you just a bit more information about how you can, how we can help you evaluate your unemployment cost options. Again, visiting our website, www.chooseust.org, you can complete the evaluation online. You can also, if you find that reimbursing is going to be effective for your organization and that transitioning to the reimbursing option and becoming a member of UST looks like it'll be a good solution for your organization going into 2014, by enrolling with UST, you can begin taking advantage of some of the benefits of claims administration, particularly in terms of advice around how to respond to claims at the point when you agree to enroll. So thank you everybody for your time today. If you have any additional questions, please don't hesitate to contact us. We can be contacted by email or phone at the information that you see here. And you can also find us on Facebook, Twitter, and LinkedIn. We'd love to answer any questions that you have about unemployment savings for nonprofits or help you determine whether or not reimbursing and participation with UST might be a good solution for your organization. Thank you again, and have a good day.